Once again, we are missing tons of FTD data over on GameStop for several different days, and the SEC decides that they want to redact the data and not comment on it. Take a look at this. Heavy hitters for FTDs are these single stock ETFs. Leverage Tesla and MSTR ETFs are the two big ones that appear as high FTD count almost every single day. About 20% of their daily volume each day is failed to deliver. And shout out to the Ultimator over on Twitter. He says, I have been long speculating that they are used to inject liquidity into single stocks, and it looks like FTDs are playing a major role in that process. The next standout I see is USSG. On settlement day 1/9/2025, there were over 9 million FTDs. This ticker has a monthly volume of less than 1 million shares. This last 9 months only add up to about 9 million shares total, but there was a 54 million daily spike back in April of 2024. What does that mean? These FTDs are likely rolling from 9 months ago. The next big standout though is a company that I have never seen before called Sobo. The FTD count was 4 million on settlement date of 1/2/2025. If you subtract 1, the trade date was 12/31, which had only 324,000 trade volume. Then going back a few days later to December 27th, 2024, there was 4.6 million in volume. If you see that day, T-3 as the trade date, then 86% of the entire trade volume failed. So what does that mean? That means the SEC is probably using, for the settlement, a T+3 instead of a T+2, which is regulation. Why is Sobo showing a 3-day settlement? Now we're going to expose some stuff really quick. So obviously these heavy FTDs suggest market makers are struggling to settle trades, possibly due to synthetic shares. So what's the plan? How do these FTDs actually get covered, or do they ever get covered? First of all, they can just continue to roll and kick the can down the road like they have been doing. Or number 2, the SEC comes out and they don't make the data look as bad as it actually is, like they have done before. They stopped reporting cumulative data in 2021, the cumulative FTD data, which made it harder to track rolling FTDs over time. And now we're in this position again. Market makers can also use dilutions, reverse splits, or buyouts, etc. to clear the FTDs, which is a dangerous game. Example, companies have historically issued shares or done split adjustments that reset FTD tracking. Now here's an unlikely possibility, and I'll explain why. A short squeeze scenario where brokers refuse to keep rolling synthetic shares, market makers would be forced to cover. Why is this such an issue? We have a huge conflict of interest in the market once again. If this gets major media attention or political pressure, the SEC might be forced to act, but history suggests they'll do nothing unless there's a major crisis. Once again, they ignored the meme stock events in 2021 until GameStop congressional hearings forced them to respond. Now, what is the conflict of interest here? Why is it unlikely there's going to be a short squeeze from the FTDs solely? Well, it's because the prime brokers who decide whether they want to stop allowing these market makers, these institutions, to kick the can down the road and roll their FTDs, right, and continue to over leverage, the prime brokers are the ones who are doing it. The prime brokers include Goldman Sachs, Morgan Stanley, JP Morgan, Citadel, Virtu, Jane Street, Susquehanna, so on and so forth. Some of these prime brokers are the market makers. This is a huge conflict of interest in the market. Moving on, XRT ETF is also still on the threshold securities list. We talked about this. It's been on there for well over 13 consecutive trading days. It's almost like the SEC doesn't even exist. It's not even a thing. They are in bed with the too big to fail players, and retail is, we're in a market where everybody is basically just absolutely screwed. There's almost no point to even be in the market. Now, another institution added more GameStop shares, $878,000 worth on January 30th. We move on. That brings us into the point of this. The next deadline for institutions to report their holdings, including any GameStop positions, is February 14th, 2025, covering holdings as of December 31st, 2024. Okay, GameStop's quarter themselves is ending today. They are a little bit off from other companies, but institutions still have to report their holdings from the end of each calendar quarter. They only have that 45-day period. So February 14th will be that day, which leads us into a couple things that I want to talk about on the chart. But if you haven't yet, make sure to like the video. It's free. That's all I ask. GameStop's trading at $27.80, and we talked about a couple of things that I'll show you, a couple different scenarios. First of all, when Ryan Cohen did the same thing that he just did, a very similar thing at least, August 13th of 2020, which he just did very recently, what we saw in the chart was something like this over a period of time leading into a squeeze. Okay, we are we could potentially be in the same period right here during the August 2020 move, which would mean that you see something along the lines of this, which would be a much harsher squeeze, but it would take a lot longer. Okay, one possibility to pan out. Next, we also have that possibility for February 14th, like we talked about prior to that date, to have some sort of move. Now, what's interesting about this is we have talked about it on AMC, and I'll show you in 1 second, but the 10-day lag period or so. So we have this major squeeze where algorithms got broken on really January 27th, and then the 28th, they took the buy button away. But January 27th or 28th, 29th, we're still extremely high on GameStop stock, right? Or maybe they took the buy button away on the 29th, but I believe it was on the 28th because this thing would have kept going parabolic, right? So you have that 10-day window, which leads us into around that same time frame. So the week beginning February 16th or the week beginning February 8th, and that would also line up with the end for the institutions to report the week ending, the week beginning February 10th. Maybe we have that squeeze. So after we missed a ton of catalysts, first of all, the December time post, nothing came out of it. The 1-9, nothing came out of it. And so far, at least for now, the carry trade right now, GameStop still flat. Our FOMC meeting, GameStop still flat. Ryan Cohen transferring his shares, GameStop still flat. We need some sort of different catalyst or algorithm break or something along the lines of that. Lastly, for the stock, which not really lastly because we have to talk about AMC and how it'll correlate. GameStop rejected off of the RSI being very, very overbought twice at the 70, which is okay, right? GameStop got a rejection off at the top of the Bollinger Bands around $33, $33.50. We came down and now we're testing the midline on the Bollinger Bands on the weekly time frame, meaning we have a lot more room for upside now as we cool off, as the RSI also comes down towards the 50. We're right around the 55, okay? So rejections on the RSI are cool. That's fine. We also saw something very, very similar happen back here, right? On GameStop around that same time frame where we were talking about Ryan Cohen purchasing those shares right before this rally higher. So you got a double RSI cool off, and then you started to ultimately rally higher. I mean, long story short, we just expect ultimately upside. Very bearish case scenario, which I don't expect to happen. You guys really don't even need to hear it. Is GameStop actually retracing back down to around $18.50 by October and not having a squeeze, which I don't think will happen. Now, we also missed the catalyst today, 1-31, which was the 40 billion swaps expiring over on Reddit. At least we potentially missed that catalyst. That's not to say that there's like a grace period or something along the lines of that. AMC Theaters just promoted Nicole Denson Randolph to Chief Creative Officer as Elizabeth Frank named Real ID CEO. I really don't want to cover this. It's just a replacement, something within the company. Hopefully brings them in more revenue, all that other stuff. It's not that big of a deal, in my opinion. This is AMC on the daily. We have been tracking these boxes that I have on the chart right now, which correlate to the recent period back in 2021. I'll give you the same scenarios just like I did for GameStop. We got this bottom January 5th. We got this bottom January 14th. Same thing, 10 days behind. January 27th, 28th, 29th, right? That period where the algorithms were cracking. AMC is right that 10 days behind, leads you into February 7th or the week beginning February 10th once again. So the next catalyst, quote unquote, we're looking for is like we keep continuing to look for things that could potentially happen, even though we see a bunch of criminal activity in the background where market makers are dealt the hedging, trying to pin the price on AMC and GameStop, pulling the volume more than on exchanges into dark pools, just exchanges that do not affect price action, and then also failing to deliver tons and tons of stock. But alongside that, we just look for the next catalyst, so on and so on and so on and so on and so on. Now we're on the weekly time frame. Another possibility. We had a couple things drawn out here. This is a weekly chart, meaning we don't see a bottom yet until mid-March, which that would also lead GameStop into that further move that we've seen, that larger squeeze that we talked about like this, right? You can see based off of this pattern back here, AMC looks like it's coming to retest the low like it did before squeezing, which this low was around $10, $11. This low where we are now is around $2.50 to $2, right? So we'll see where AMC goes. If we get beneath $3, that's likely what's going to happen before a squeeze, but we'll watch it from here. Now, Trump just said that 25% tariffs on Canada and Mexico will be implemented March 1st, so he delayed that a little bit, also causing the US dollar to spike after the threat of the tariffs. Gold is breaking all-time highs once again, and December PCE inflation came out rising to 2.6%, which is in line with expectations. Everything is in line with expectations. The market reacted well, 609.29, up 0.7% on the day. Now, let me tell you, we are in what I'd like to say a very boring market. What do I mean by that? Bitcoin's been stuck. Earnings plays gap up, then they come back down, or they gap down, then they come back up, basically staying relatively flat, right? Market makers are what I'm expecting is you're seeing tons of liquidity being pulled in for some sort of event, right? A lot of these large institutions are sitting on cash instead of investing into equities. They're investing into other safe havens, just like you see with gold. And then you're also seeing very odd moves coming near max pain prices towards the end of the week in order to make the most options expire out of the money, the most contracts, calls and puts, right? So a lot of liquidity is being pulled into these areas. And when everyone thinks the market's going to dump, it decides to rally higher. And that's why I think we are in a boring market. Now, given we got a lot of volume, well, we got a lot more volume than the previous week on this candle on the SPY, but you'd have to take a closer look into the daily timeframes and see when that volume came in, because we did break the low of the recent candle on last week. Now, what do we need to see for the SPY to be bearish at all? You'd like to see SPY close beneath the body of this candle, in my personal opinion, which would be beneath 608, okay, where this body of this candle is, or 607.90 or whatever. Right now, the SPY is retesting all-time highs, and we have to see ultimately where it's going to go. Based off of a couple of different scenarios, just like we gave you with AMC and GameStop, I do see the SPY at least coming back down to 586.20 and retesting that, even if we don't get a crash, and here is why. We take a look at a couple of things, right? First of all, back during January 2021, which everyone's talking about, that's the cycle, not even correlating with GameStop necessarily, but hey, we're in a 2021 bull cycle, just like, crypto. Crypto is about to have its next parabolic leg up, SPY, so on and so forth, right? So we come and we take a look. We have the same diamond pattern that played out, a break to the upside, and ultimately this ends up breaking all-time highs and fading back down about a month later. If we saw the same thing with SPY, that's what would happen. You break all-time highs, which we did, and you fade back down eventually. Okay, that's not to say we don't hit 616 before fading back down or something like that, but I think we fade back down to 586 before either making all-time highs or getting that crash. Another thing is we saw Roaring Kitty's January 2nd, 2000 posts on his video. Come and you line this up, you're seeing something a little bit uglier, but sort of the same thing, right? Diamond pattern. This is basically where he said we were, and coincidentally, right, we got a flash crash a couple days later. Same thing, we got this flash crash. We came up to test basically near all-time highs, and we faded lower. Ultimately, both scenarios, you did fade lower. You didn't crack relative lows from October, but you did fade lower. So what that looks like is you come back to October, and you don't crack relative lows, which is 569, 570, right? You don't crack those lows, but you do fade lower. Okay, so we may see 586, we may see 580, or we may crash. Okay, who knows? Based on all of the data, we may crash. As of right now, Apple, let's talk a little bit briefly on earnings. We had Apple puts going in earnings, which if I held a little bit longer, those would actually be coming closer to break even right now. Apple sold off, they beat earnings, and then they sold off, and then they gapped higher off guidance. They came back lower today. It's sort of the same thing that happened with Tesla. Tesla gapped down, came up, gapped down, came up, and now today it's actually looking like it's going to close above 418, which is pretty bullish. Now, if you did, you'd want to take a look at the volume on today. And you want to see today's volume get a little bit higher if we're going to get that close up there for that to be bullish. Okay, right now, Apple has max pain, I believe, of 230, and I think market makers are going to pull it close to that towards end of day, or maybe even 233 towards end of day or something along the lines of that. you might see a bleed across the board alongside the SPY as well. I want to talk about a couple other trades. Nvidia, we had Nvidia puts. These were very profitable, okay, about 50% profit or so or more on those. And then if you held, they are now probably near break even or slightly red. We came up to retest this 150 EMA right here after we broke beneath it and tested 117. And as of right now, you have to wait for a reaction. So it's dangerous to hold through these, and it's also dangerous to cut them because we had for further enough expiration where we could kind of watch it play out and get another rejection to come down to 109, which is next level, 111, 109, right? Or if you cut them, then you could potentially watch this and ride it up, right? Do a potential gap fill up to 141 before rejecting and coming back lower. ARM reports earnings next week. It's up 6%. Another chip company, AI company that had a nice, beautiful, big gap fill right here, and we need to see where it goes from there, essentially. Another trade is Alibaba 101, down 1.5% on the day. These calls are slightly red, but we have a beautiful weekly candle breaking above resistance with a ton of volume. So I don't see this trade going against us. Overall, guys, that is what I got for you for today's video. The top link in the description is for my Discord where I post my trades as soon as I take them, and I'm in there on the daily talking back and forth with you guys. So get in the Discord. We also have tons and tons of benefits like major options alerts, dark pool activity, insider trade activity, immediate market news, over 800 traders in there who want to become financially free like yourselves. And if you want Discord paid for, press the second link in the description, open a Moomoo account, it's a free broker, and make a deposit. Once they approve you, they should approve you right away. After you do that, you will get these free stocks and earn 8.1% APY on your uninvested cash. Get access to level 2 order book data for free, trading options, going long, going short, viewing other exchanges, and more as a retail trader. Overall, guys, those are the top 2 links. Don't sleep on them. Enjoy your weekend. I love you all. God bless. Lottery Stocks out.